It is Monday, the 13th of November. So let's do a little video update. There's not really an awful lot to say because, Forex markets were pretty quiet last week, as was gold and silver. But for me, the main story is it's got to be Bitcoin. It's had significant falls in the last 4 or 5 days, from 788 down to 555 on this chart. You can see we've got a potential weekly engulfing pattern here, so a big blue bar last week, as you would expect in a strong bull run, and then a complete reversal of that, not only wiping out the previous week's gains, but more than that. So this is a huge engulfing candle, reversal candle, everything. It's very, very negative, and look how far we've diverged from the 100 and 500 day moving averages. I mean, we're just absolutely miles away. It was insane up there. And as you know, I did try a short position when I was hunting for a negative pattern. I spotted a head and shoulders, which I was keen to trade. I did get short, but I got us out of that very, very quickly when we spiked up to 788. I got us out at something like 7,350. So I mean, the loss was very, very small. Unfortunately, there was no sell signal up at the highs. I really wanted to get short, but for the reasons that you see on this weekly chart, really, it just obviously gone way, way, way too far. Very overbought on the daily chart as well, it was at the time. But there was no real sell signal up here. There's no pattern, no sell signal, nothing. It was just so overextended, it had to come down eventually. In my report, I warned you to be cautious. I said we are likely to trade lower, but I couldn't give you any better warning than that without something telling me to short it. You know, it would have been very irresponsible for me to tell you to get short without some clear reason, even though we're overbought. But there you go, that's the way markets work, unfortunately. So looks like we can, we've traded down to this level here, 55.73. You can see there's some Fibonacci action, 55-day moving average going on there. That seems to be the low, actually, 55.55, so that certainly is working. I don't really see any reason for that to be a strong buy level. I think we can continue lower, certainly down to the sort of 5,400, 4,800 area. That should be a decent area of support. That is actually also around the September high. What have we got there? 4,979. So there's quite a lot going on down there. I would suggest if you really are looking for a place to buy Bitcoin, you could at least start there if you're looking for a longer term investment, and it's probably worth a punt on a bounce. I don't know how far it will bounce though. I'm not convinced that we have. Wouldn't be surprised if we got further to go, shall we say? But let's just see what happens around that 5,000, 4,800 level. The end story is pretty simple, as you can see from this chart, going back to March. This trend line is the one that's really been working. It also coincides quite closely with a 61.8% fib resistance up there at 114.32. Subscribers know all about this. I've been banging on about it for weeks. It certainly seems to be working. We seem to be backing away from there now, not particularly steeply, but we seem to be backing away. So we'll just have to see whether that continues to hold or whether we reapproach it. The trend line's not particularly useful, just thought I'd throw it on to see. If we bounce back up again, then it's just a question of does it hold or do we break through? So you know, you're selling it up around the 114.30, 114.60 area, 114.75 even. It's really like a 40 pip range there, that and you can see the upper Bollinger Band as well. So there's a lot going on there. You've got July high, May high, a lot going on there. But that also means, therefore, if we start breaking through 115.00, it's a good buy signal. So really, that's, you know, your sort of pivot area. You're short up to it, looking for it to pull back again down to maybe the moving averages down here around 111.65. But if we break up through 115.00, that's going to be a buy signal. Euro US dollar, it's now a story of what's going on with this head and shoulders pattern. My subscribers know all about this. I've been banging on about it for weeks, or for a month at least, when I spotted that its potential topping here. Okay, so we broke the neckline. That's the neckline, as you can see here. We've broken it, we've come down, we've come up to retest it, we've retested it twice really. I'm getting a bit frustrated with these retests. I really was looking for this market to collapse, but I guess we got so oversold on the initial break, having already gone lower for 2 months, that I suppose a retest here isn't a huge surprise. We need to unwind that oversold situation. The only way that this will fail is if we break up through the 100-day moving average, which is around 117.25.30. We start pushing up above there, I'll have to say that it's failed. It'll squeeze out a load of shorts, and perhaps we'll then push up through 117.90 for further bullish confirmation. So I'm hoping shorts in the euro, US dollar finally kick in and we can break last week's low. This is the New Zealand dollar, which again I'd said sell up around these highs, actually 69.79. I think we were selling it around 65.70. So I'm quite pleased with this. Starting to back away. I'm still short. I've been holding these shorts for a while. These days you've got to hold your positions for days and weeks rather than hours and days like I used to be able to, because we've got such little volatility. But it's all pointing to low. We're in a bear trend. We've managed to hold the first Fibonacci resistance and a shorter term resistance that I can't show you on the daily chart, but that's why I had the level a little bit lower than 69.90. With the stochastics are turning, so it looks good. I'm going to hold on to those shorts, and if I'm really lucky we should retest the October low in that low $68 area. Euro yen chart's a little bit messy. I've got semi-trend lines on there, but they're all necessary. I'm wondering whether this double top will finally kick in. You can see we've really only gone sideways for pretty much 2 months now in a pretty narrow range, up from the high of 134.41 down to 131.72, 131.43, very much sideways. Can we settle below the 55-day moving average and this mid-point of the Bollinger Band, and then start to trade lower down to, good support at 130.40. Hang on, there's something going a bit wrong with my chart there, sorry. Right, 130.80, 130.70. We've got 100-day moving average down there. We've got decent fib support as well. So let's see if that works. Let's see if the double top kicks in. I'm not overly excited about this, but if I had to put a position on, which I don't have at the moment, I would be looking to short it for those reasons. This is the Emini S&P. We've seen quite a lot of weakness in the European markets, DAX, Eurostox, a little bit of weakness in the FTSE, but US markets are holding up. They've been the strongest performers for a long time now. They just relentless charge higher, very little in the way of any sort of correction. Maybe we can turn lower now. There's a slightly negative candle here. This as we managed to peak up at 25.94.5 and then reverse that, we've got that long lower wick. So it's a little bit negative, and I'd suggest that we could see a small correction but I really don't see any reason why this is about to turn around and crash. I know there's all sorts of people talking about a crash, but I don't see it yet. Crashes usually build over a length of time, weeks and months, and build a pretty clear pattern, starting with a big drop and then a move back up again. So I don't think this is significant. I'm watching it really carefully. I'd love to sell the indices, but there's just nothing telling me to short it and hold it at the moment. Now, your DAX chart, DAX has been a bit weaker than the S&P. We have seen a decent correction. Last week we peaked at a new all-time high of 13,533, and then we proceeded to drop about 400 points, nothing too significant. We do have an engulfing, bearish engulfing candle on the weekly chart, so that is quite negative. That is a sell signal. I don't think we're going to see anything too significant on the downside, but certainly some more losses not out of the question. We're overbought in the weekly charts. We do need to rectify that situation. We've got the high up here for June, the previous all-time high at 12,948. Yeah, why not? There's no reason why we can't test that. We've got a trend line down here at around the same level anyway, 12,890, call it. I guess if we were to break below the 2015 high of 12,426, that would be more of a major problem, but I don't really see that happening. We'll just have to keep an eye on it. Bearish engulfing candles are negative, but only in the real short term. It's not a big enough pattern to suggest the market's about to crash. We'll have a quick look at the daily chart, see if it's giving us any further information. Not really. Obviously an engulfing candle here was the sell signal, and I did spot that and warn subscribers that we were going to probably go lower, and we have done that. A bit more stable on Friday with an inside day. So again, nothing too significant, but I do think we'll probably head a little bit lower, but I'll be looking for buying opportunities on further weakness. Oil, crude, WTI is interesting. It's had a real good run since the beginning of 2016 actually, so we've had almost a 2-year recovery from this tremendous drop from 112.24 all the way down to 26 bucks. We've recovered almost 38.2% of that, and it looks like we're running into trouble now. We're getting overbought in the weekly chart. We're very close to the 200-day moving average, as you can see, which comes in around that sort of high $58 to $59 area. If you're looking to short it, that's got to be the place to go. You've then got this trend line up here at 60.5, so really it's a pretty low risk trade. You could put your stop in above 61, for example. You'd be looking at risking maybe $2.5. But the downside potential, we've just opened. The downside potential, of course, would be pretty big if the bear trend were to resume. You'd really work well with the trailing stop strategy and see if we can at least dip back to the high $40 area, the sort of $47, $48, $47 area. That would be interesting. On the daily chart, we're starting to see a little bit of negativity, just a few negative candles up there, not enough for me to call a sell signal yet. We are very overbought. I really would like to see one more spike higher to that sort of $59, $60 area, which for me would be a good selling opportunity. I've got a small short order in there, so I'm hoping that we'll do that. I'm trying to be patient and wait for my opportunity, wait for the level.